You're listening to the Mind Behind podcast, where we'll be interviewing guests about their inner journey of building their dreams.
So if you have a dream that you want to fulfill, this is the podcast for you.
Warmest welcome everyone to a new episode of the Mind Behind a podcast. We're so happy that you are tuning in here today. And before we start, we just want to share that this episode is in paid collaboration with Bybit Nordic. So Bybit is one of the world's largest cryptocurrency exchanges. And we are really happy about this partnership because we have been interested in cryptocurrencies and the blockchain technology since 2017. And actually one of our first ever podcast episodes is about cryptocurrencies. So this feels like a full circle moment to do this new episode here. So what we are really passionate about now with this collaboration is both to share knowledge about this area that really could be the future of finance, and also to share this perspective of thinking long term. We want every one of us to start thinking in years and decades. That's really how we built our portfolios. So remember that all investments involve risk, and this episode, what we are talking about, does not constitute any investment advice. So always make your own research. With that said, let's start the episode.
Today, Camilla and I are really excited to have an incredible guest with us here. So we have Gustav Buder, who is part of the company Bybit, and we will have a conversation about cryptocurrencies, which they are within, and what they do, and how you can start investing as well. So with that said, warmest welcome to Gustav.
Thank you. Nice to be here.
So happy to have you here. We are really excited about this, right, Camilla?
We are very excited, and especially because we have now partnered up and really entered this amazing partnership with Bybit and Business and Dreams.
So. Yes, we're super proud about it. So thank you so much for being here, Gustav. And I was thinking, would you like to start by maybe sharing a bit about yourself and what Bybit does?
Yeah, sure. My name is Gustav Buder, and I'm like a fintech founder and entrepreneur. Started my company in 2018 in the fintech industry regarding like payments and payment infrastructure for merchants. Maybe you heard about like Nets or Adyen or Stripe.
Yes.
Something like that we built. And in that journey, I recognized that our payment infrastructure and how actually our financial system works in a technical sense is lacking behind the new technology boom that we're living through. So I then decided to, like, after 7-8 years building that, I decided to step down and maybe start a new company, but then I actually joined forces with Bybit. It's one of the biggest crypto exchanges in the world. So what we do is we're providing liquidity and buyers and sellers for the crypto market, and now we're also stepping in to build like a much broader platform, like a modern fintech platform for your investments and your payments. So that's what we focus on.
Yes. Love it. Thank you so much for sharing. And we actually met the first time, I think it was a few months ago now, at a dinner. It was a mutual friend of ours, and Bybit was hosting that dinner. And I remember I was really fascinated by you and your whole company, what you're doing. So I'm really proud again that we have partnered up with you now so that we can share more knowledge about cryptocurrencies. So yeah, what is our next question?
I am so curious to hear, for anyone who hasn't started yet with investing in cryptocurrencies, what would you say is the steps you should take, and what should you think about if you're curious about getting started into investing?
I think it's like stepping into something pretty new. It's like a new infrastructure for the new financial system. So, and everything is actually based on, in some sense, Bitcoin. So everybody have maybe heard about Bitcoin, but what we see in the data, not everyone have yet started to use it or invest in it. So I would say that the first step should be to like buy your first part of a Bitcoin, or at least read about Bitcoin. And then I also get like, oh, but it's so complicated, I don't understand it, I don't invest in something I don't understand. Then I also would argue that, do you really understand how the internet works? But you're using it today. So you should also have like an open mind, but not be scared of maybe it feels complicated. You start step by step. And it's often good also to start experiences by first hand, like trying to use it in some way is a good first step. And I mean, most ways people use Bitcoin today is like an investment, like a part of your portfolio allocation. And then you maybe should reconsider to also have your allocation in some part to Bitcoin. And how you can do that, I mean, I'm just talking about my experience here, so I mean it's not any recommendation in some sense, but how I approach it is like, this is more like a real estate investment than maybe a tech investment in that sense. And one example that I have is like, I bought my first apartment in 2017. I think in July 2017, and I think August or September the whole new like project apartment business in Stockholm crashed, and I was one of them that was in that because I bought it 2 months earlier. So what I'm recognized with that experience was that real estate is very clear cycles as well. So like you can go up a bit for some time, and then it corrects a bit, and then it goes up again. So it took me 6 years of holding just my apartment to get break even. And why I'm telling you this is because if you look at historical data just regarding Bitcoin today, everyone that have hold Bitcoin over the 3 years is in profit. So even if you buy on the absolute the temporary top, you shouldn't be scared. You should start just allocating more. Is my approach of it. So if I like just bought at the top, I can actually buy more. But I can't buy more of my apartment when I bought the top. I just have that apartment, and I need to hold it, and I can do nothing. I think that's actually the brilliance with real estate. That you often, when you buy it, you can't just sell it.
You're stuck.
You're stuck. So actually it's one of the brilliance with the real estate market, that people buy it and hold it for very long. And that's why they in the end do profit. Because they keep holding it over time.
That's a great point.
Very interesting.
Yeah, it's not that easy to sell and buy, when you have your house.
But the amazing thing with Bitcoin is that you can actually, you don't need to buy the whole thing at once. You can just start allocating month after month, and then you're going to get an average allocation. So it's like you should chunk up the price of the apartment that I had in different splits based on the price of that apartment. It would be much cheaper for me to buy my apartment if I could do that. Exactly. So that's the point here. You actually get a much better entry into an allocation or an investment if you can buy it in chunks, in pieces.
That's very interesting, because I think that's one of the most common thing that investors or people try to do, is trying to time the market, no matter if it's real estate or if it's stocks or maybe Bitcoin as well. And like you said, it's a good thing with real estate that you can't be so emotional and so quick. Like with stocks, I think many people tend to get emotional and maybe fear gets involved, and they sell 100%. At the wrong timing. So it's really, you have to turn off your emotions when it comes to investing and think long term. Can you explain a bit more why monthly investing is something that can be good even for Bitcoin as well?
I would say that monthly investing, of course, is good when you talk about funds and the stuff. It's often that you should like monthly invest. But I think it's even more efficient with Bitcoin. And I also want to comment the stocks. I think it's a very complicated time we are living through. And a lot of companies right now probably going to struggle a lot with the changes with AI and internet and robotics. So I think it's very important in these times to be even more cautious with what you allocate into, because a lot of things could be disrupted the next 10 years.
Yeah.
And then of course but Bitcoin isn't that the same? Yeah, of course, in some sense you have some risk left, like it needs to stay decentralized, it needs to stay secure to have value, of course. But if we have this as a baseline risk, if they just keep that functioning, and in one perspective I have is if they don't keep the security enough, then we're also going to get all our banks hacked. So that's, I think it's a good baseline. And then the decentralized perspective is that it needs to be decentralized to be secure and not be corrupt by one government or one country or one company. And right now I think it's over 25,000 unique nodes connecting to the network that validates every transaction or helps validate every transaction that are made through the network. So today I don't see any risk of being the decentralization going to disrupt in some way, and the security I actually see that it's bigger risk for the banks than the Bitcoin. So that's a good baseline for the validation of the investments. I see that's the only major risk I need to control. Everything else is, the funny thing is, it's not much other risk you need to see, because if you have invest in a company, you need to look at competitors, you need to look at the management, you need to look at a lot of regulation. It's so much other things you need to take care of when you do the investment. Because Bitcoin is not like a company in that sense. It's not compete in that way. It's more like a new way of money. And it's more like of a protocol. And what that means is like more like an internet. It's like investing in a part of the internet, but we're now investing a part of maybe the new financial system in the future. And of course, everyone thinks today that everything can be competed out. But when you look at protocols, the competition is not in like 50-year cycles or 10-year cycles. It's like 2 to 3 to 500-year cycles. And we are 17 years in of having Bitcoin in our world. So I see this at a very early stage still. Because we don't see any like everyday usage here in Sweden, for example. We only see starting like real usage of the Bitcoin network in like developing countries. But we see already that Bitcoin is like top 7 biggest market caps in the world of all assets. And I think that's something that is pretty interesting, that we have, and it's actually the asset that have grown to 1 trillion in market cap fastest. So every other asset have taken much longer time than Bitcoin to grow that big already. So I think, and it's nothing that competes with Bitcoin yet. If everyone thinks, it's going to come at something else to compete out Bitcoin, I don't think so, because it's more a protocol. So that means that every other cryptocurrency is more or less like supported by Bitcoin, or like based by Bitcoin in some sense, or valued against Bitcoin. So it's more like Bitcoin is the center of the new money, and then we have all other cryptocurrencies that are more other parts of the financial system that you need. So Bitcoin doesn't solve maybe everything, I don't say that, but it's the new solid foundation for the next financial system.
That's super interesting. And I love also the comparison with internet in its early days. I read around like the number of Bitcoin users, or the amount of people that have Bitcoin compared to where internet was when they had that same number. And it's, it's very early still, as you said. So it will be really exciting to see the development. And some people are comparing Bitcoin to kind of digital gold, because there is a fixed supply of Bitcoin, 21 million, and the same for gold. There's a fixed amount as well. Would you say that is a good comparison with digital gold?
I think it's a good comparison with digital gold in that sense. That's because money for us have been different things over time. the last like 200 years, money have been debt. And nobody maybe think about it, but money is debt in our system today. But before that, we had gold, for example, as money. And gold is a type of asset. So money has also been assets. And Bitcoin creates money to be assets again. So in that sense, yes, it's very close to gold. But it solves also all problems that gold had that didn't get gold through the last 200 years. And that's how easy it is to transfer, how easy it is to validate the transaction, how easy it is to trust it and know it's not any double spending problem or something like that.
Right.
So that's the biggest problem with gold, because if I'm going to do a deal and I'm living in America and the buyer is in Europe, we need to travel to each other and someone needs to bring the gold. And then okay, you can be robbed, and it's very inefficient.
Right.
And then maybe you write a paper, then a promise that you get the gold, and then you need to trust that. It's the double spending problem, and then you can write 2 papers or 3 papers on the same gold, and then you have an issue. So Bitcoin is much more than gold, is my answer. But in a value sense, in an asset sense, it has the same metrics. But it's much more scarce. Because it have an absolute limit of 21 million. And gold have actually not been grown from the ground up yet. A lot of gold is still in the earth, and you can dig up more every time. So I think we dig 2 to 3% of the gold supply every year. So you have like a 2 to 3% inflation rate in gold, sort of say.
Interesting. How would you look at investing in gold compared to investing in Bitcoin? How would you see those 2 alternatives?
I mean, I'm joking with that everyone that are pretty wealthy and things turns to shit, they love to grab rocks, to have something physical to hold, to feel safe. And of course, gold can probably solve that issue in our time as well. But if we just do the math, it doesn't make any sense actually to invest in gold more than a hedge today. Because if you just look at gold, when USA decided in 1971 to not nominate their dollars into gold anymore. That means that they said the promise was after the Second World War that we have $35 per ounce. That was the price that they promised you get for your dollars in gold. They stopped that in 1971. And from that price, $35 until today, with like $4,500 or $5,000 per ounce, it's like 140. Now it depends a little bit. It's really volatile right now, gold, but it's like 140 times. And if you divide that and do the mathematical formula of like CAGR, compound annual growth rate, then you get around 8% per year. So then you have an average return of 8% per year from 1971 until today. And that's maybe then what we can say how much we have print money in that sense. But you need to add then the inflation of gold, that we dig up more gold. So then we have like 10% in average maybe. And then we actually need to have the other inflation we have. And then the inflation in our currency that we like, the inflation goal that we measure in consumer goods. So maybe then we have 11 to 13% that you need to make in return to be break even every year. So gold doesn't give you that. It gives you part of that. And a lot of funds also promise a part of that, around 7 to 8%. But I would say that you should aim for more than that if you should prosper. Because otherwise it doesn't make sense to just work and save money if you don't have a good saving engine. And for me, how I do it, I see Bitcoin as the perfect saving engine for me. It's a perfect way of give my long-term savings work for me in the future. So historical data now, I mean, everyone knows that historical data doesn't equally sees how it could be in the future, but I mean, Bitcoin have an average return in KGAR, however you calculate it, in at least 30% plus, or I mean, if you calculate 1 year before, it was like 50% plus. So, and the base assumption I have is that we're going to see more stable growth in Bitcoin over time. And I mean, it's going to grow for eternity, like forever. But I would say that we can see a trending towards maybe 20-25% KGAR in average return in maybe 10 years. So we're going to have an higher return because of the networkers effects the next like 10 to 20 years, and then it's going to stabilize, I think, based on that Bitcoin's actual drivers for the price is three major things. And the first thing is technology deflation, or I call it that. That's like we create with our technology more and efficient systems every year that makes us do more for less. And that should be actually meaning that we actually get more for less. And that's what Bitcoin then actually gives you. Because based on that you have only 21 million and everything gets more efficient, you can get more from less in the value for Bitcoin. Then you have the second proxy, I would say, is the expansion of debt, or like the inflation of debt, maybe is the right word for it. And I don't say money, because I see actually the money we talk about today, or the currencies we talk about today, is debt. And then the third thing is a little bit sad to talk about, because that's population growth. And I mean, it looks like we're peaking a lot right now around the world. So that we need to solve.
Yeah, that's true. And I think around investing, I think that many people find it sometimes risky to start investing, and you don't know maybe what you should invest in. But I was just thinking about it because I was speaking with my dad, and we talked about living prices, and he just thought that everything was so expensive when I mentioned different like rents and all that kind of stuff. And he shared with me how cheap it was back then when he was young. And it was just crazy to hear those numbers. And it got me thinking that, you know, from a day-to-day basis, we can't really see inflation. But over like 10, 20, 30 years, it becomes so apparent. So the biggest risk of them all is truly to not risk anything, because then your money will truly shrink due to inflation. So yeah, I was just thinking, for anyone who want to start investing in Bitcoin, like what would your first step be? Because again, we want to, you know, take, you know, not too big of a risk, maybe, you know, still start in a small way, as you mentioned in the beginning. What would your first step be to really, you know, start investing in Bitcoin and do it on a regular basis, as you mentioned too before?
Yeah, I mean, I think the biggest issue people have, I think, is to overthink a lot.
Yeah.
That's why I try to do. You don't need to understand everything.
Yeah.
And you need to like make the baseline assumptions correct. And that's what I've tried to give you as arguments here, like already. And I mean, if you want to invest in the like one of the 7 biggest assets in the world that are growing rapidly and never had been a loss if you hold more than 3 years, and have actually created very good returns for the ones that have been through these first 3 years. I mean, for me, it's a no-brainer. But the biggest issue isn't that, the numbers and the arguments. The biggest issue is you being uncertain and thinking of risks in a bad way. So I of course you should take mitigated risk. Of course you don't want to lose your money. I know that, but you need to have a mindset that money that you invest, you need to do it with certainty over time. Then you're going to succeed. And from my perspective, then is do it with certainty. Decide, make a long-term decision. It's the hardest things. We are always like, now it's war, and now it's this, and now it's this, and what have changed? The funny thing, nothing has changed with the Bitcoin like investment idea. through everything we have been through the last like 10 years.
Yeah.
So you should actually, the answer is always the same. And the funny thing, our system is rigged that way that however we do it right now, it's probably always going to benefit Bitcoin. And that we can talk about that more later. But so the answer I just want to give you need to be certain in a long time period. And the long time period is at least 3+ years.
Yeah.
You shouldn't even consider buy Bitcoin if you don't want to hold it at least 3+ years.
That's a really good point. And it reminds me kind of because we support women in starting companies, and it's kind of similar there that, you know, you can hesitate on a day-to-day basis and you say, I will start tomorrow, and then tomorrow comes and then I will start tomorrow again. But it's really about making that decision, as you're saying, and like, I'm starting now and I'm seeing this for the long term. Consistency, exactly, to take small actions all the time, just as with investing.
And then it's much better to decide of a sum that you feel like in monthly basis is okay.
Yeah.
But then you should fight for it. You shouldn't make the easy decision then. You need to really fight for that sum. It should be as important as your mortgage.
Love that.
Or as important as your electricity bill.
Yeah.
You understand what I mean? It's much better to decide then, okay, this is a sum I'm fine with.
Exactly.
It's okay.
Yeah.
But then never negotiate that decision again.
I thought about that.
Maybe only negotiate if you want to do it bigger.
Yeah.
About if you negotiate, oh no, this month is tough, I don't do it. No, make it no negotiable every month.
Yeah.
I love that. I thought about it because there is this expression like pay yourself first, which means that you start, when you get your salary, you start by making investment in yourself and your future. But so many people are just, you know, letting their money go to different causes, and they're like, oh, now there's no money left to invest in myself and my future. And to really make that commitment, like, you know, my future comes first and then all the other things comes. And as you say, to decide on a sum that feels manageable in the long run, so you never have to negotiate that. And I think it's so interesting that we pay our taxes, we pay the mortgage, etc., but to pay ourselves first, that always comes last for many people. To shift that mindset is really, really powerful.
And I agree that to set up an automatic investment so you don't have to even think about that sum. So it's like a Spotify subscription or something, you just don't think about it.
Exactly.
It's really the most effective, instead of thinking that you have to be so smart and you have to look at the market and you have to do like, it's not even beneficial. It's better just set it up, forget about it, and then let it be automatic.
You can decide to buy monthly to your Bybit account and like save monthly into that.
Yes.
And just buy once a month.
Yeah.
But you can also set up a AI bot that are your helper that buys for Bitcoin for you every 10 minutes or every hour. So if you like have for example, if you have like 500 euro a monthly savings, then you can split it up to decide that a part of that going to be bought every hour for the whole month.
Wow.
And that costs nothing extra at Bybit. And then you have accumulated actually exactly all the fluctuations in the price for that whole month.
That's amazing.
So you have no, I mean, that's the opposite of buying, you know, one apartment once and wait for 10 years.
Yeah.
Now you just follow the price forever.
Yeah.
So you don't even need to think of the volatility.
Yeah. That's amazing.
Yeah.
So you can do that kind of things with Bybit today. And what you also do differently when you buy Bitcoin in real terms that you can do with Bybit is that you hold your own, you can hold your own keys very easily. You can decide to withdraw your Bitcoin to an offline wallet whenever you want, and you hold the actual Bitcoin through Bybit. If you buy like an ETF or something like that, you're never going to be able to hold the real Bitcoin. You're always going to get like returns, or if you want to get some returns or sell something, you're going to just get it back in your normal currency. So here you can actually decide to accumulate over time Bitcoin, and then you can also maybe in the future decided to use it as your how you do with your apartment or your real estate that you maybe don't want to sell it. You maybe just borrow against it a bit, and then you can do something else with that money. And if you think of it, I mean, if you fully own your Bitcoin asset, you you have also the opportunity to use it in that way that you can borrow against it in the future. And people maybe say, oh, it's not good to borrow, but I mean, you have mortgages often in your real estate or in your apartment where you live. And I think the numbers, I think there was a Swedish guy, economic journalist, Cervenka, I don't know his first name, but Cervenka.
Anders.
Yeah, exactly. Anders. He wrote a book about like greedy Swedes, and he did a calculation that in average real estate have returned, I think, 8 to 10% the last like 20 years or something. So then I mean, then it had been good to have mortgages to a real estate if their interest was lower than that, of course. And the same is with Bitcoin. So if you can accumulate a good position over like 5 to 10 years, and then maybe in 5 to 10 years, not sell it because then you lose your position. But maybe borrow against it a bit to do what you want. And the funny thing with that structure and that strategy is that it's very similar to how banks do money today. They actually just borrow against their balance sheet to give you a loan. And they earn money on it.
Okay, so I think we should finish off this episode with just some last advice for people who are listening and they're curious, they want to get started. Do you want to just give last advice, maybe how they can use the Bybit app or what actions they can take after listening to this episode?
Absolutely. I mean, the Bybit app is like another financial app, so you can just download it and then start using it. You just need to do the KYC and then you can transfer some money. You can buy your first Bitcoin, but you can also use it as a payment app. We have like a Bybit card. It's a MasterCard. So you actually can also try to pay with crypto if you want to in stores. But I would say that the best first like action points is to start testing to invest in Bitcoin. You can set up a recurring buy feature if you want to. So just try it out and see how it works. But the good thing with this kind of technology is that you own the assets for real and you can take it out if you want to. It's very easy to transfer, so that's a very big thing besides like stocks and stuff. It's very hard to transfer to other platforms or maybe just hold it by yourself. With all cryptocurrencies, it's very easy for you to actually hold it by yourself if you want to, whenever you want to, from our platform. And I think one thing we haven't mentioned is the difference between like holding assets on Bybit and holding assets in your bank. I think it's good to people to understand that at Bybit you hold assets by like 1-to-1. That means that all assets that we say that we hold for you in your account is actually actual assets that we hold for you. And when you want to withdraw them, we take just that asset and withdraw to you. And that's not the same thing with banks, because banks want to lend out all the money that you have there to other clients, and they use it as collateral to make more loans. So that's the typical issue with the bank structure we have today. We call it fractional reserve banking. That it's actually very fragile if a lot of customers have the same idea to withdraw money. Some of them are going to stop getting declines because they can't withdraw that much money at once, because then they going to lose the equity and be bankrupt.
I think most people don't think about that they have in Swedish, it's called insättningsgarantin, that you're only guaranteed up to a certain amount. Sometimes it's around 1 million Swedish SEK, and above that you don't have a guarantee for the money you have in the bank. So it's very interesting.
That perspective is interesting, because I mean, it's just a guarantee. I don't have seen exactly how long time that guarantee going to happen, but if we hopefully we never going to experience it, but if one bigger bank get the issue, I think it's not going to be an easy fix. You're probably not going to get access to your funds for a pretty long time, and when you get it, it's going to be new printed money directly from the central bank. So probably the total value of the currency going to be devalued a lot before you get back your insättningsgaranti. So that's also something to have in mind, that it's not safe. It's in that way that you think it is. Maybe.
Exactly.
Very interesting.
Super interesting. I love this conversation.
I absolutely love this conversation. I learned so much. I mean, you have so much knowledge around this,
and so many interesting perspectives too. Like that with where you live, for example, to compare that with investments and all of these perspectives. So I was super grateful for this conversation.
Yeah, and changing your mindset from having maybe this saving mindset, thinking that it's safe, to instead have the investor mindset and think about how you can grow and have this expansive mindset. And that's something we're very passionate about women learning more about, to have that expansive, growing mindset when it comes to investing your the assets and the money you have. So thank you so much, Gustav, for being in this podcast.
Thank you to be here.
Thank you so much. And last question, how can we connect with you for the people listening who want to learn more?
Yeah, you can follow me at Instagram, Gustav Buder, or you can follow the Bybit Nordics at Instagram as well.
Amazing.
So
we will link that in the show notes. Yes. Yeah. Thank you so much, Gustav, for being here. And thank you also so much, everyone who joined us. We hope you liked this episode, and we can't wait to see you in the next one. So thank you so much.
Thank you.
Bye-bye.